Hey everyone, and welcome back to Data Driven Value, where we show you the tools and we teach you the skills to help you take your financial freedom into your own hands. So, a little bit different of a video again today. We're going to do a little bit of a deep dive. I have a bit of a pros and cons list here. So, we're going to be looking at HIVE, ticker HIVE. That's HIVE Digital Technologies. So, one of the Bitcoin miners that I frequently follow, as well as have been following and investing in for multiple cycles now. So, just breaking it down here, we'll get into a few of the pros first, and then we'll talk a little bit about some of the metrics around it, some news kind of supporting some of these catalysts, and then a list of cons. A lot of the cons are going to kind of have a contrasting view that's not so negative, but yeah, we'll get to those later on here. So we see here our first pro, consistently one of the most efficient Bitcoin miners in terms of Bitcoin mined per exahash and hash rate utilization dating back beyond 2023. So we have a ton of data dating back to 2023 in terms of the Bitcoin mined per exahash per month on average basis. So Hive's consistently been one of the top producers in terms of efficiency of all the Bitcoin miners for the longest period of time. So in 2023, they ranked second just behind Bitfarms. And then 2024, I do have them. They're up there, definitely in the top tier of the Bitcoin miners. I kind of rank them all on an industry standard and compare it against each other. So we can just take a look over here. And we do have, so I've got my Bitcoin production tracker here. So we have the monthly Bitcoin mined for the company as well as the Bitcoin mined per exahash. So if they scored a green score in Bitcoin mined per month, it just means that they were able to beat the prior month's production. If they scored yellow, they just matched it. And then red just means they weren't able to meet the prior month's production. You can see an obvious drop off here in April. It's just because the halving event. So they did experience a halving event in the amount of Bitcoin rewards that the miners were receiving. Also, we did see a large 50% uptick in the Bitcoin network difficulty and the total network hash rate, contributing to higher difficulty and therefore fewer rewards. So we can kind of see a lot of the miners throughout the year. We did see rewards trending down. That was kind of expected due to the increase in difficulty and the increase in the network hash rate. It is important to see, we want to see miners kind of increasing increasing their production from the previous month. Just means they're consistently adding hash rate and executing on a growth strategy. Um, but another important metric, sheer production size isn't the most important because there are other factors that we need to take into account. This is kind of a smaller company, so what they're producing relative to their market cap might actually be more attractive than some of the larger companies that are producing more Bitcoin but at a less efficient rate. So what we're really paying attention to right here is the Bitcoin mined per exahash. So it's essentially just a measure of their efficiency of their mining fleet and how much Bitcoin they're able to mine that month based on the amount of exahash that they have running. So obviously a green score is going to be best. It just means they kind of ranked in that top percentile. And then yellow kind of middle of the pack. And if they scored a red score in that respective category, it just means they were kind of on the lower end of the pack. It doesn't necessarily mean that it was a poor metric for that month. It just means they weren't able to kind of keep up with some of the better producers. So we see here Hive basically in their Bitcoin mined per exahash green across the board. So essentially, they've been able to maintain kind of that top tier efficiency throughout the whole last year, as well as in 2023. So really good performance from them on the efficiency side. We can see over here, I do have, sorry about that. Yeah, we do see, so I ranked them here. This is a Bitcoin consistency or Bitcoin production consistency score. So basically, every month they were able to beat the prior month. They got 1 point, and then every month that they were able to match the prior month, they were able to get zero point 0.5 points. And then if they mined less than the prior month, they didn't receive any points for that. So just kind of getting a little bit of a gauge of the consistency of their Bitcoin production. If they're able to consistently add exahash, we do see here that they kind of ranked in the lower percentile in terms of overall Bitcoin production. But again, that doesn't necessarily mean that it's bearish or negative. We would like to see them consistently adding hash rate, and we will kind of address that further on in this deep dive. But over the past year, it is important to note their growth just hasn't really kept up with the increase in difficulty in the network. However, we do see they scored a perfect score on their efficiency. So again, really efficient. That's kind of what I want to see, especially with a small cap company like this. I really want to see a lot of value out of the business, and then just them being so efficient and utilizing their hash rate so well. especially consistently for years. It's kind of unheard of in this space. So a really good job to Hive kind of for maintaining that operational efficiency and excellence. Just moving down a little bit, we can kind of take a look here. So again, we have them at 6 exahash currently. They have a 0.7 share percent of the network, so they're not a massive player. That being said, there are some very attractive valuation metrics regarding their stock. We do see in terms of efficiency, they're right kind of in the middle of the pack, but with their further expansion, they're going to have that down to below 17 joules per terahash. So that'll put them in this top percentile as well, along with some of the other most efficient miners. We do see their Bitcoin mined per exahash on average for the trailing 12 months was definitely in that top tier. Yeah, so very good job again showing that operational efficiency. Then we see here their mining uptime from the previous month. So just, yeah, we're seeing here obviously 90% plus was kind of the benchmark for the top tier miners. And then kind of going down from there, we do see the Bitcoin hodl. So they have 2805 Bitcoin. I have it marked just as yellow here just because it's a little bit smaller of a hodl position than some of the other miners that are holding like tens of thousands of Bitcoin. That being said, this is a very large amount for a miner that's such a small market cap. So we'll kind of get into that further on as well. We do see here in terms of energy under management, again, just showcasing that they are a smaller miner. Red doesn't mean that it's bad. Again, just, yeah, a smaller scale miner, so they've got less power. They do have a 100 megawatt facility in the works, so that'll be coming online in 2025, and we'll see an additional bump in their energy under management there. We have here, this is their non-Bitcoin mining revenue for the year. So I had it at 9 million, about approximately 9 million. I believe it's up to over 10 million right now, just in HPC revenue. And then again, we see their prior year hash rate growth. So it grew 25%. They did meet their growth target, but they did meet their growth target. But when we go down here, we see that they did dilute 34% in the year. So their growth wasn't accretive to the dilution. That being said, they are still growing the company. So we'll see going forward kind of both the respective dilution as well as when they get to their hash rate targets. But just for that calendar year, just note the growth was not accretive, but in the past it has been. So I expect it to be going forward, especially as we reach that upper target of the 15 exahash that they're targeting. But yeah, just interesting to note that. Yeah, but it met their hash rate growth, and we see their implied growth from the current hash rate to their target of 15 exahash is about 150%. So they are targeting a bit more aggressive growth than some of the other miners this year, which is interesting. Probably, I guess, just because they didn't grow so aggressively this year. And then we see the 2025 revenue estimate. That's not bad. So $116 million estimate on revenue 2025. For a $400 million market cap company, that's really good. Let's see here, we have our revenue to market cap ratio, and it's on the higher end of that. So ranking again kind of in the top 5. Good job from Hive there. Again, so we're just moving down the list here. They were the first publicly traded Bitcoin miner going public in 2017. So they've successfully navigated multiple Bitcoin bear and bull markets, as well as halving events. That's really kind of, I think, an understated metric for them, just because they have that operational experience, and they've done it so consistently and on a very strong scale. So I haven't seen any other miners really kind of performing on such an excellent standard operationally, dating back so consistently. And I really like consistency in my miners that I invest in, because I want to know that their strategy going forward, that they've had a successful past history of executing on their strategies. I don't care if they're promising me everything in the world. If they don't execute on that strategy, then it doesn't matter to me. It's just kind of speculative value. I really like to find a lot of fundamental value. So the fact that they have been able to successfully navigate such hard market conditions really is a testament to management and kind of their experience in the space. We also see they're previously one of the larger Ethereum miners. So people also kind of don't really know this, that Hive used to be a major Ethereum miner. They were actually a bigger Ethereum miner than a Bitcoin miner. Um, Doing so for a long time with great margins there. So they're able to actually utilize their profits from Ethereum mining after the switch to proof of stake, and they're able to kind of start expanding their Bitcoin mining business, and that's what's got them to where they are today. So, and again, it just really showcases their ability to kind of pivot when they need to, and successfully navigate really hard market circumstances. A lot of Ethereum miners kind of just shut everything down, sold all their GPUs, and just got what they could out of it. We saw Hive really mining to the very last minute. And then essentially they started pivoting their cards to mine different cryptocurrencies and be paid out in Bitcoin. So still earning income on those cards. And then now we're also seeing that they've diversified into the HPC revenue space. So yeah, a few different revenue streams, but really great to see. Hive's done a great job at being able to pivot and actually excel in those new circumstances. And then again, just being such a strong and efficient miner throughout the year, it really translates across their various business models in HPC, in Ethereum mining, and Bitcoin mining. They've just been very efficient and consistently efficient. So really great job again. We see they've got a very strong liquidity to market cap ratio. So again, we talked about their balance sheet with 2805 Bitcoin and counting. So they're actually still adding Bitcoin onto the balance sheet. And there is a potential price appreciation here. So I just have a little chart just looking at their current Bitcoin HODL, and then if this was the respective price. And then we also have 2025. If so, I kind of took a projection of their of what they might expect for Bitcoin mining rewards going forward, and kind of making some assumptions based on their growth strategy. But we do see here, if they were to HODL 50% of the estimated Bitcoin I think they could produce in 2025, at 100K, their total stack would be worth 346 million. So, and then we've got at 125K, it would be worth 432 million. So that would actually exceed the current market cap by about 30 million, 35 million. And then if we see here, if it was at 150K, their current HODL would actually also exceed the current market cap. And then with added with the additional Bitcoin from 2025, they'd be looking at about $520 million just in Bitcoin on their balance sheet. So we can go back here. Again, we see that liquidity to market cap ratio over here for Hive right now, it's 81.7%. So I don't actually, I'm going to have to update this because due to their recent purchase of AI chips, it was about $30 million. So the last reported cash they had is going to be a lot less. So I actually put that to 0. So again, now they're actually at a 74% liquidity to market cap ratio. So still, again, it's top of the industry. Very attractive. It just shows that for the amount that you're getting 74% of your value in Bitcoin alone, just on their balance sheet. And then now we've also got the addition of those new H100 and H200 GPUs. I'll talk about that in a second as well. We see also down here, just based on a market cap divided by exahash minus their HODL. So taking their market cap, subtracting the amount of Bitcoin that they have on their balance sheet, and then dividing that by the number of exahash, and then in millions. So this just shows us across the industry what each company is being valued at on a kind of per exahash basis. So we see here DMGI, but Hive, again, this is what I want to showcase. They're being valued at essentially like less than half of the middle of the pack kind of people. So we see here Mara's at about 40, CleanSpark's at about 55, but we kind of see it ranging everywhere from, let's say, 40 all the way up to even 200 for some of the AI compute hybrid miners. And then we see here Hive being valued at 17. So essentially they're being valued at a third to almost a tenth of some of these other miners, despite having such an attractive liquidity to market cap ratio. We see here their current ratio is also very strong, so they do have a bit higher of a debt equity ratio we see here. So a little bit higher, but that's all right because they have such a strong liquidity position. They're able to cover any kind of short-term liabilities if it came to that. We see here their price to book ratio, again, ranking in that top percentile for the miners. Coming down again, EV divided by revenue, so their enterprise value divided by revenue. Again, a top ranking number. Again, enterprise value divided by hash rate, ranking top of the game again. So you really see kind of in those comparative valuation metrics, Hive really excels. Where they kind of look bad, obviously, is in just the size of the company and their ability to grow. We will kind of address that further on as well. And then we see here, I do have an updated number for that. I'll have to change it, but we see institutional ownership. It's a little bit less than some of the other companies. That's kind of something I'll touch on as well. I think mostly just due to it being a smaller cap stock. And then we see the average analyst price target. So I have that marked green because it's got the most upside from the current price to the analyst price target. So just interesting to note there. And then we do see here, this is just an accumulation tracker. I shared some levels with Hive before that I was accumulating them in. So we just have that here, but we'll just move on. We see the first miner to expand into AI HPC compute. So we have lots of miners kind of getting deals with AI companies, or at least expressing interest in providing some power to these AI hyperscalers. Hive Digital was actually the first to expand into AI HPC, and that was when they pivoted their Ethereum mining cards into AI HPC. So yeah, they were kind of pioneering that front as well. Pioneers in Ethereum mining, kind of pioneers in public Bitcoin mining, and pioneers in the AI HPC compute space. So yeah, really cool to see them ahead of the curve on so many fronts. We see, yeah, again, we talked about their strong liquidity to market cap ratio, their diverse revenue streams. So they've got Bitcoin mining, they've got GPU services. So they've got GPU as a service, they've got their cloud business, and they also have that alternate cryptocurrency mining business. So utilizing some old Ethereum miners to essentially mine other cryptocurrencies and be paid out in Bitcoin, just providing additional returns. I'm going to get into a little bit of speculative math here regarding their estimated 2025 run rate. So we have here, they're currently 6 exahash. They're building out a 100 megawatt facility in Paraguay. So they kind of have said that they'll likely get to 12.5 exahash by around Q2, maybe Q3 in 2025. They say they will have it fully operational by the summer, so Q3 kind of around then. So I just have it marked here, assuming they're 6 exahash from January to May. And then this doesn't account for incremental hash rate increase. This is just taking an average of the numbers I have available. Obviously, I can't predict exactly how much hash rate they're going to bring online and when, but we can see here, obviously, assuming 6 exahash from January to May, and then they bring on additional hash rate here, and then they're 12.5 exahash from June to August, and then they bring on the rest of that facility, bringing them up to 15 exahash from September to December. And then I took the average monthly increase or combined monthly increase in total network hash rate and Bitcoin network difficulty. It came up to just shy of 7%. So going forward, just assuming that the difficulty essentially is going to increase about 6.75% per month for the calendar year of 2025. I kind of extrapolated these potential numbers for Bitcoin mining output. So I just took obviously 93.25% of their previous Bitcoin mined in 2024 of December, and that gave me 96, and kind of just doing that forward. And then obviously you can see here in June, this is when they bring on the additional hash rate, and you can see that reflected there. And then again, they bring on the additional hash rate here in September, and you see it reflected there. But again, that increased difficulty kind of reflected throughout the year. So I've got a total estimated Bitcoin of 1309.6. So the value of that, if Bitcoin's price was 100K, would be 131 million roughly. At 150K, that would be just shy of 200 million. And then, so their last reported quarterly profit margin was 38%, and Bitcoin was at an average price of about 61K that quarter. So that would kind of equate to a 164% profit margin if Bitcoin's at 100K, and about a 300% profit margin with Bitcoin at 150K, or a potential average net profit of 105.82 mil. So how I got that number was essentially I just took the 125K and multiplied it by their profit margin, just taking obviously the average kind of between this 100K and this 150K estimate. Moving down, so we see there obviously 105 mil of net profit in mining for the year of 2025. That would be amazing. Obviously, if there's a company right now, it's being valued at $400 million. You're getting $300 million of Bitcoin at the current price, not accounting for more price appreciation. And you're getting $105 million of net profit at these certain prices. That's very enticing, especially given what I'm kind of going to get into later about their data center valuation. So again, though, we break down the AI HPC revenue. The current annualized run rate is 10 million. It will be up to 15 million once they fully deploy these H100 chips that they just bought. and then it'll be a total of 35 million once they have a full deployment of the H200. So the H100s, I believe, are set to be deployed by Q1 2025, and the H200s are set to be deployed by Q2 or the second half of 2025. So just looking here, 2025 revenue estimate with Bitcoin at 100K. Basically, we have 10 mil from the current HPC. We've got 3.75 mil coming from the H100s. So that's just the difference between the current annualized run rate and then the new annualized run rate once they have those deployed. And then taking 75% of that because it's only going to be deployed on Q1, so it'll only be operational for 3/4 of the year. And then we see the 10 million additional here from the H200. So they're set to have about a 20 mil annual run rate, but again, set to come online on the second half of 2025. So 10 million contributing to revenue here. And then we see 130.96 million of Bitcoin mining revenue if we are at 100K Bitcoin. Obviously, that scales up. We see down here, if we're at 150K Bitcoin, that is 196 million of revenue. So a potential revenue for the year of 154.71 to 220 million. Interesting, or not interesting, but important to note, the revenue or the analyst projected targets for revenue for Hive, 116 million. So if we were to see Hive really get revenues of 155 to 220 million, they'd be blowing those estimates out of the water. I do think earnings are going to look a lot better this year, especially kind of with the price appreciation of Bitcoin. It was a tough year last year with the halving event. It really took a number on kind of the Bitcoin miners' earnings. I don't think any miner really posted very good earnings. So interesting to see going forward, and we will have a bunch of financial reports, I think, coming in the next couple months. So we'll follow those closely as well. We do see here, so I just want to go and allude to the acquisition to fund their expansion in the Bitcoin mining front. So obviously they announced an acquisition of 8.6 exahash of S21 Hydro chips, project 15 exahash by summer 2025. So, and then again, they're projecting $300 million of annual revenue kind of once that's fully deployed. My estimates kind of take into account their deployment schedule. And again, so it kind of just breaks it down, but everything that I have said previously essentially will just essentially they'll bring the efficiency down to 17 joules per terahash, and then on a blended fleet standard. So they'll be within that kind of top tier, kind of really get themselves up closer to that mid cap miner status at 15 exahash. And then, yeah, they are set to have that kind of come online in 2025, summer 2025. So we'll be watching that closely. Then we see here, obviously, their expansion with their purchase of additional NVIDIA chips. So again, $30 million, they bought the H100s and the H200s to be deployed in Quebec. The H100s are already on site and they'll be deployed in Q1. And then the H200s are capable of the annual run rate of 20 million. They're set to be deployed in Q2 2025, so we'll be watching that as well. Another thing I like to see here, as we scroll down, some more pros here. They have the lowest cost of GNA as well as SGNA per Bitcoin mined in the industry. So that's selling and general and administrative expenses. Sorry about that. But we do see here, so we want to see this lower, obviously, than higher. So if we come over here, they've got the lowest GNA compared to all their peers by quite a bit. So definitely good use of their funds there. Why that's important. So we see here, basically, a lower SG&A expenses means more of the company's revenue is converted into profit. Profit margins increase, can lead to higher earnings per share, indicates the company is managing its overhead efficiency, shows a good sign of management practices and effective cost controls. Often it prices their products more competitively and they can survive price wars better than those with higher overheads. It does suggest sustainable growth without proportionate increase in costs. So a lot of these miners, as they scale, their costs kind of go up as well. And I'd prefer cost to kind of come down. So nice to see Hive really maintaining that low G&A cost. It does free up cash flow, and it can promote things like development and expansion, which is mostly what Hive uses it for. And then we can see in economic downturns or industry slumps, companies with that lower SG&A expense have a better chance of weathering the storm. So that's kind of what I was talking about. Hive's done a really good job of navigating some tough bear markets. And I think a lot of it is attributed to management as well as them being able to really keep those SG&A costs very low. And then peers who have a higher SG&A, they might stand out as more efficiently managed. So Hive looks more efficiently managed than some of the other companies with a higher SG&A, and that can be beneficial in scenarios like mergers and acquisitions where efficiency is a key metric. So that's another thing I can talk about in a minute here. But again, just another slide from Hive's investor presentation. You see their disciplined costs. So yeah, the SG&A as a percentage of their revenue. Again, just top of the class, blowing most of the other miners out of the water. Great job from them again. Then we go back here, and we do see they're expanding their AI HPC footprint. So we talked about that. They're expanding their mining fleet and energy footprint. So 100 megawatts Paraguay facility set to come online this year. 15 exahash of rigs, and they see Q2 deployment or Q2 initial deployment, Q3, Q4 full deployment. They do have 100% usage of renewable green power. So a lot of people say it doesn't really matter, but I think going forward, especially with how much ESG FUD there is around Bitcoin and Bitcoin mining, really utilizing green or renewable power should yield some kind of a premium, in my opinion. Whether or not that's actually reflected in the stock price, I can't really say if it will in the future. But I do appreciate miners that are kind of utilizing as much green or renewable power as possible. And in Hive's case, they're pretty much utilizing 100% renewable energy. So really great job from them. Really, yeah, keeping that efficiency top of the line. And then, yeah, their use of renewable energy obviously contributing to pretty competitive power costs. We do see here they utilize heat recapture technology in a few different facilities. So one of their facilities, they're heating a neighboring manufacturing plant. And then another one of their facilities, they're actually going to be heating a greenhouse that'll be producing produce for the community. So interesting there. There definitely helps them lower overall costs as well as kind of contribute back to the community. Nice to see Bitcoin miners really building that symbiotic relationship with the communities that they're working in. It's kind of a nice difference compared to the traditional oil and gas companies or the traditional energy companies. They just want to take from you, whereas the Bitcoin miners, they're actually incentivized to give back. And we do see a lot of miners kind of participating in programs like that, kind of is touching on that here, the demand response programs as a service to local grid operators. So during times of high stress, Hive is able to curtail some of their operations and support the grid and support the community, keep everything on, keep the heat and the lights on for the people. So really, really great to see. I like to see miners doing that. We do see they have diversified operations. Right now, they're based in Canada, Sweden, and then Paraguay soon with that build out. USA soon, so they don't have any US based data centers right now. But it is interesting to note that they have announced their relocation of their head office to San Antonio, Texas, and transitioning to US GAAP reporting. So essentially, this is bullish because it's just going to allow for a little bit more access to capital, I think, as well as all the major miners are based in the U.S. and that's where we're seeing all these major data centers being built out in the U.S. in Texas in specific, as well as that's where all the AI hyperscalers are moving to. So good to see Hive making that move to Texas. It will be interesting to see if they have some plans for data centers going forward. That being said, we'll just follow that as kind of time goes on. They do have 100% ownership of their assets, of their data centers, as well as the Bitcoin. So a lot of different miners, they might only have partial ownership of the actual infrastructure or their mining business. We see Hive here owns 100% of their business, so they own their data centers. I do think that's a very important metric there. And then again, we see they're 128 megawatts active, 228 megawatts upon completion. So looking at their book valuation of their current facilities, they have it marked at 131 point about 16.8 million. And then so looking at the industry standard, kind of taking an average, I came to about 1 million per megawatt that Bitcoin mining facilities are being valued at right now. So they're kind of right in that industry standard. But looking over here at a traditional data center standard, so this is where it gets really exciting. You see traditional data centers are valued much higher, so they could be valued anywhere from like 5 to even $15 million depending on the actual infrastructure, the type of data center, and what it's able to support. So just seeing here, we have actually seen some analysts and some publications referencing how cheap Bitcoin mining data centers were in comparison to traditional data centers and saying how they're basically 90% undervalued. And we kind of see that here. So basically, if I measured it on a 7.5 million per megawatt standard, just in that range of the traditional data center. valuation. So we see here 128 megawatts at that valuation would be 960 million, and then their 228 megawatts at that valuation would be 1.7 billion dollars. So we do see here, if they were to kind of regain some valuation or capture more of a premium on their data centers, similar to what some of the other miners are currently doing. So Core Scientific and Wolf have both captured a premium on their data centers due to their transition to high performance computing and AI compute. So if we see Hive kind of continue to branch into AI compute, as well as really start to see more and more interest in Bitcoin and Bitcoin mining, as well as just interest in data centers. So that's another big thing. As AI compute gets bigger and bigger, they're just going to be interested in the actual energy capacity, and that's when companies like this, who have already have large energy footprints, they start to look really attractive because they have that core infrastructure, and that's what's really needed. But interesting to see just the potential on a revaluation standard if they were to kind of be valued more like a traditional data center operator, and then that kind of have them as one of the most attractive potential M&A targets. So I don't know, I can't speak obviously for management. I don't know if they would be interested in being acquired or merging with another miner. But again, just due to all the relative valuation metrics that we looked at, their liquidity to market cap, the value of the business that you're getting compared to all the other miners, they're really going to, I think they are the most attractive in terms of if a big miner was looking to acquire someone, they would acquire a substantial amount of Bitcoin just on the balance sheet, as well as that 6 exahash business and the pipeline too. So really attractive. They could add Bitcoin on the balance sheet, add an instant turnkey 6 exahash of data center mining capacity, and then that future pipeline. So I'm not sure, but I kind of would think that we do, as we start to see the Bitcoin mining space get more and more competitive, we'll continue to kind of see mergers and acquisitions. So this last year we saw CleanSpark acquire Grid infrastructure, and then we actually saw Grid the next trading day, their stock price jumped like 75% or something crazy like that. And then we saw Bitfarms acquiring Stronghold Digital, and then again we saw crazy price action on Stronghold once that news was announced. So if we were to see a big miner kind of express interest in Hive, then I really think we would see some crazy price appreciation, just given all those undervalued metrics that I just talked about. Um, but yeah, so especially at such a low market cap. So obviously you see here, $400 million market cap. That's only one. That's less than 1/10 of Marathon's Bitcoin hodl value. So you can really see how some of these big miners, even if they were to pay a premium on the stock price, they could still get Hive for a really attractive price. And I think it would be a very symbiotic relationship with a lot of other miners because Hive is so strong from a fundamental production side and efficiency side. So they've really nailed kind of the operational excellence. Where I do think they need to kind of start to excel a bit more is in growth, and maybe with a merger, they might just be able to get access to more capital and then kind of be able to really scale their growth a little bit better with the help of a larger miner and maybe kind of a symbiotic relationship there. But I kind of digress about that. It's kind of just one of those things I have in the back of my mind. I'm not investing based on the fact that I hope they get acquired. I just do hope they get acquired because I kind of have recognized the previous effect on share price of other companies that have been. So here we'll just get into the cons a little bit. There's not a ton, and a lot of them do kind of have a counterpoint. So I'll talk about that right now. You see historically more conservative growth approach than some peers. So yeah, again, when we were breaking it down, their growth compared to the other miners of the prior year wasn't amazing. 25%, not the worst as some others, but kind of ranking in kind of middle or lower tier in that pack. But we do see they're targeting more aggressive growth in 2025. So we'll hopefully see them execute on that. But they have well, not a history, but management has said in the past that they don't want to overpromise and underdeliver. So we see a lot of Bitcoin miners telling us they're going to get to certain exahashes at certain times, and then they just miss those targets. They either miss them by a sheer amount, or they'll miss it by a long period of time. So Hive has said they don't want to overpromise and underdeliver. They just want to focus on the fundamental excellence, the efficiency, the profitability, and then let growth kind of come next. So I do kind of appreciate that stance as well. While like I would have liked them to kind of pursue more growth last year, it is nice to see them getting a little bit more aggressive this year. Hopefully, they are able to execute on that strategy. They were able to execute on their strategy last year, although their kind of target growth was a little bit less. But again, just the more conservative, not necessarily bad, but sometimes really targeting that hyper growth, even just the hype from that will really send a stock flying. So I think we saw Hive lagging a little bit last year, and I think it was just due to that lack of kind of the hype news. But again, we want to base kind of our investments on fundamentals and technicals first. And then if we do get those catalysts or those news announcements that kind of send these stocks on a bit of a run, then that's kind of really we can capitalize on those, but we're not basing our investments on those. Hype dies, but fundamentals stay. As long as they stay strong, then the company's strong and they can kind of weather any potential downside. Whereas companies who are less strong fundamentally, maybe less strong financially, you go in periods of downtime and they actually can go bankrupt. So we've seen that with many miners before. It is a big worry. It is a big risk with these companies. So again, kind of that historical conservative growth approach has actually been very good for Hive. And I kind of do believe that it's really helped them focus on the efficiency side, which they've done so well, as I kind of emphasized earlier on. You do see here, obviously, they are a smaller market cap stock, so that's potentially leading to issues such as easier stock price manipulation. These are Bitcoin miners. The stocks are heavily shorted, so it is easy for prices to be manipulated by big money or whales. The lower the stock price, the less money you actually need to kind of move that price. So there is the potential for easier stock price manipulation. Sometimes less access to large institutions or investors. Sometimes they have a market cap requirement and overlook some of the smaller cap stocks. So some companies might not even look at investing in a company if it's under $1 billion market cap. So until we kind of get to that higher market cap and we start getting included in some of the larger stock indices, then we kind of just we won't have as much access to capital. That being said, because it is a lower market cap, you don't need as much capital to move the stock. So it's not necessarily bad, but we do kind of want to get to a higher market cap where we start to really attract more institutional investors. I kind of showed over here the current institutional investment of Hive is about 23%. We're seeing a lot of top miners kind of coming in anywhere from 40 to 60%. So we want to see that really increasing going forward. And then less investor awareness. Obviously, smaller cap stock, less known. So then we also see here no current U.S. operations or data centers. We have seen them address that by relocating their headquarters, but we want to see them hopefully expanding and opening some data centers in the U.S. Obviously, the risk of dilution to fund continued expansion. If they're going to announce data center buildouts in the U.S., then we're going to have to deal with dilution. Dilution is a part of the game with the miners, and I say it to everyone. If you're going to invest in the miners, you can't be afraid of dilution, but you want to be investing in companies that are kind of accretively diluting, so they're utilizing their funds to grow the business larger than the amount they were diluting. In the past year, Hive was just shy of accretively diluting, so I do expect them to hit their targets this year, do a little bit better job. But in the past, they've done a good job historically, but just interesting to note that in the past year, they kind of missed that target a little bit. We do see the inherent risk of a smaller cap within a highly volatile sector. So Bitcoin miners are very volatile. Bitcoin is volatile in itself, and I consider Bitcoin miners to kind of be a leveraged proxy on top of Bitcoin. So that essentially means whenever Bitcoin moves up or down, I consider the miners likely to move anywhere from 2 to even 5 times the amount up or down in that direction. So if we saw Bitcoin go up 3% that day, you might see the miners up 10%. Same thing to the downside. If you saw them down 3%, we might see them down 10%. That's just because they're very low market caps. Again, compared to Bitcoin in itself, the price is a lot more easy to move. There's a few more things to do. Again, talking about the short interest. So there's a lot of shorts on these stocks, and they're incentivized to kind of manipulate the price, keep it low to profit from those. But then again, that can also present squeeze opportunities to the upside. So a short squeeze, essentially, we see the stock either kind of creates some hype, maybe you get a news or a catalyst, something that really causes some immediate buying pressure. And then you see these people who shorted the stock, so they're betting that the price is going to go down. They have to start to cover their short positions before they start losing a lot of money. And by covering their short positions, they're forced to buy the actual stock itself. That increases the buying pressure, sends the price up further. That's what we call the short squeeze. So we do have that the risk of the smaller cap within the highly volatile sector. So yeah, there's that downside risk. Of course, in the bear market, most of the miners went down 90, 95%. A lot of people weren't able to stomach it and maybe capitulated in the lows. That's why I kind of focus on the fundamentals first, because when prices are down 95% in the share price, it's really hard to find conviction unless you know the company is still profitable and you know they're going to be able to weather any kind of near-term risk. So I like to see Hive. Obviously, Hive has done a great job of that. This is just obviously an inherent risk of these mining stocks that I like to tell people, kind of touch on. Obviously, we've got some external unpredictable risk factors associated with operating infrastructure data centers. So obviously, they can't control the weather or anything like that, or any kind of equipment failures that could materialize. So again, these are all just little external factors that could affect operations. But they've done a great job over the years of mitigating that and not letting it kind of reflect on their production or their efficiency. So I expect that going forward. And then obviously we've got regulatory risk is always there, because yeah, there's just more and more ESG FUD, more regulations around the environment. I do believe they're moving to the US because, again, there's going to be such an ease on regulation there, especially in Texas. We see Trump meeting with a lot of Bitcoin miners, really embracing them. Um, so yeah, regulatory risk, I think it's lessening in the US, but it might be getting worse kind of abroad. We do see places like the UE kind of, again, pushing more towards that ESG mandate, where we see the US kind of moving the opposite way. So we do have that, but yeah, we'll just keep that in mind. Just moving on here, I'll take a look kind of at the chart. Actually, we'll take a look at dilution first. So kind of, yeah, I was just talking about dilution as a risk. So this is just looking at the miners. Obviously, you can see this is the last 2 years. They all dilute. They all need to raise capital to fund expansion. But as long as they're growing the business with those funds, then I consider it okay. Kind of see Hive here right down near the bottom. So nice to see, not diluting as much as some of the other miners, just upticking a little bit throughout the couple years. You can obviously some of the miners really kind of diluting and utilizing those funds. Some of these miners have experienced larger growth. So that's where you get the trade-off kind of. So Hive didn't grow as fast, but they didn't dilute as much. So kind of pick your poison of what you prefer. Um, but moving forward here, we'll just take a look at the charts real quickly. I want to kind of point at a prior cycle pattern I just noticed looking at Hive's chart. So Hive's one of the few that's actually been through multiple market cycles, as I mentioned. We can see here, this was the first cycle of 2017. Um, See when they IPO'd, there was this little dip here. It's hard to see without zooming in, but there's a tiny little dip here where they came back and retested this little support before going on the parabolic run for that cycle. And then it's just important because I'll show you over here that little retest was actually the bear market low. So you can see, yeah, little retest here that acted as the bear market low. So I'll just get rid of this line for now. But you can see here we had our bull run, peaked up here, and then this big long downtrend. So blow off top, the bubble burst, everything's coming down. We saw a little bit of a bounce here, so a little dead cat bounce, just to kind of get a little bit more hope, lure a few more people into the market before breaking down more. And then you see we broke down and then we got stuck under this trend line. You can see we got rejected here, we got rejected here, we got rejected here, and we got rejected here. But you see we put in that bear market low and then we went up and we put in this higher low here and then we went up again. So we put in a higher high. So this is where we've really almost changed our trend structure. We went from the downtrend of lower lows and lower highs. We've now switched to higher lows. This is the second higher low here. So this is fully confirmed that we are now in an uptrend. We break out of this trend line here, and you see we come back, retest it, and then that's where we base ourselves before going on the next parabolic run, and we reach that same resistance level that we reached in the prior market cycle. So looking at this here, I see a similar kind of pattern playing out. We had our bull run, we had our blow off top kind of thing, we had our bounce here, lure some market participants back in, continued breakdown, and then you see we've just tested it as resistance now. We've just been stuck under it, similar to over here. Do see still stuck. Obviously, once we broke out of this downtrend here, that's when we started the parabolic move for this rally. So I'm kind of wondering if we'll experience something similar here, if we're going to break out and then kind of retest this trend line and then go on our parabolic rally. But that would look something like similar to here. So what we'd be looking for there essentially is price to kind of come up, break out here on the high time frame, and then we would be able to go up and attack those highs. Hopefully that's kind of what we're looking for a normal cycle to play out and get our parabolic rally. That being said, obviously, we're still kind of right here. If we were to come back and sweep these lows, this isn't my base case, but this would be crazy value for Hive. If we see Hive come down to around $2, I'm going to be buying for sure, but it's not my base case, obviously. I'm going to zoom in a little bit here on the 4-hour. This is in Canadian dollars, so to get the actual price history back to 2017, I had to use the Canadian ticker. So I'll switch over to the US ticker just to show you the entry points I'm looking at there as well in US dollars. But I can kind of show you again, just looking on this time frame here. So we've got this upsloping trend line acting as support all through here, and we've got this downsloping trend line that we've now broken out of. So yeah, we've broken out of this downtrend. We've held this line as support. This is a strong Fibonacci support zone. So from the cycle low to the cycle high, this is the Fibonacci golden zone right here. So we're actually sitting at the 618 of the high time frame Fibonacci golden zone. So I'll show you that right now. This just often acts as a really strong area of support. And I do really like the golden zones for accumulating these strong fundamental assets. So taking our Fibonacci tool from the swing low here up to our swing high there, you can see, yeah, there's that golden zone right in there, just to show you how I'm getting that. Yeah, so looking now, Hive is, from a cycle perspective, if we think we're going to bounce and Bitcoin's going to go on its next leg up, then Hive is a good buy right now from a fundamental perspective and a technical perspective. Again, we're just at that 618. There is always the chance to go further down to the 786. So that would be kind of down here. There is that potential, in which case I'd be looking to add to my position. And then worst case, yeah, you might break. I wouldn't say we break below this support, but kind of anything between $3 and $2 is going to be amazing value for this stock, in my opinion, assuming that the Bitcoin market structure continues and that we actually get a continued cycle play out. You can zoom and I'll look at the USD chart as well on the low time frame. So we can see here on the 4-hour, the Gaussian channel has flipped green. So hopefully see a little bit of relief here. We'll get rid of that. We can see that we bounced from this strong horizontal support zone. We came down, we broke out of our downtrend. We came back. We just bounced from the 618 Fibonacci on the low time frame as well. So again, we're just hoping that we can kind of continue this uptrend or this breakout into an uptrend. What I want to see is this high here get taken out, essentially, another higher low, and then we can continue like that. But we might be looking again, so a decent little swing entry for Hive here. If you don't have any Hive and you liked kind of what I was showing you today, you think Bitcoin's going to trend up from here, this isn't a bad time to buy. Again, you're going to have better value closer down here towards the $3 US range. And then kind of, yeah, as you go down, again, $2 and lower US is going to be amazing value. But I do think Hive is worth buying kind of in this range here, if you do kind of agree with some of the other things I showed on these charts, these metrics. We see the MACD and the RSI both looking very oversold, so it definitely could support a move up. But again, we want to see that strength in Bitcoin and the markets, so we'll just be following that going forward. I do already have a pretty large position in Hive. I've been an investor in Hive for years and years now, so it'll be interesting to watch them going forward. Really continue executing on their strategy. They've done a great job so far, and it'll be cool to see kind of what happens in 2025 and 2026. All right, guys, that'll be it for today. I know it's a bit of a long video, but there's a lot of information to cover with these deep dives. I hope you appreciate it. I hope you learned something new, and if you did, please like, share, subscribe, and I can't wait. I'll see you guys in the next one. Bye.